Good morning, everyone, and many thanks for joining us on Morning Markets from the team at True Potential. Today, we'll look back on asset markets performance yesterday and reflect on some of the key moves there. So a weaker backdrop yesterday for asset markets, both in terms of what we saw in the equity market and also what we saw in sovereign bond markets. I think a number of themes that we've been discussing over the past many months were pretty evident in the drivers of asset class performance and market sentiment yesterday. And we discussed last week some of the lenses through which we can observe market sentiment. And just looking at yesterday, there did seem to be a clear focus on the dynamics of rising COVID-19 infection rates, hospitalizations, and the lockdown measures that were being discussed in various countries across the globe, ranging from US, the UK, all the way through to China, where we saw small localized lockdowns being enacted as well. I think the other side of that was a follow-on really from the numbers that were released on Friday, particularly the jobs report in the US, which does seem to have emboldened in markets' expectations for potentially for a larger fiscal support package than maybe has been discussed in the past, maybe taking us back to something that's more aligned with how the Democratic Party positioned this in the run-up to the presidential election. And I think then finally the other aspect that was evident yesterday, particularly in the technology sector, was the role of regulation and political risk and the interaction between both of those two factors. And we'll come on and discuss that in a little bit more detail as we go through. But just looking at core equity market performance yesterday, we saw the Euro Stoxx 600 down about 70 bips on the day, the FTSE down 1.2%. In similar moves with the Nasdaq in the US down 1.2, S&P down 70 basis points. I think a lot's been made of the move and things like that, but really keep it in the context of what we saw last week. We saw a really good start to the year for equity markets, so a bit of travelling arriving. I think the technology bit is just worth spending a little bit of time on. Does speak to the impact that we saw in a number of those technology businesses yesterday, from decisions to ban or suspend Twitter accounts and other such social media accounts of the US president and a number of other of his supportive organisations. It did raise concern in some quarters really about should it be up to technology companies to regulate in that regard, or should it be up to some form of broader regulatory oversight, and how those two things interact. Clearly something that we could spend many hours discussing and debating, but it is one of those topics that I think is likely to rumble on in the background over the coming months, particularly given how we know the Democratic Party and their views on the dominance and the positioning of some of these large platforms. Turning then to sovereign bond markets, we saw a continuation of the trend that we've seen in the past week or so, where we've continued to see yields moving higher. So the 10-year in the US ended the day at 1.14%. Looking at gilts here in the UK, we're back up to 0.31% on the day. The movement higher in yields really continues to be influenced by that point that I was making at the beginning, the scale of the potential fiscal support to come through in the US. And that's something that we'll continue to monitor and report back on. Clearly it's having that impact of yields moving out, and also the expectation that it should be positive for growth, but then the potential that it may be inflationary as well. Those things all need to be taken in the round and considered, but also it needs to be taken in the context of the current economic dynamics, which are still challenging given the COVID-19 backdrop. One of the other things that we've discussed over the past number of months has been the ongoing weakness in the dollar, and perhaps the consensus that is around that the dollar will be weaker over the medium to longer term. What we've seen over the past couple of days is a bit of a reversal in that trend, and just an opportunity for the dollar to strengthen, and the dollar indeed strengthened about 0.5% yesterday against that basket of currencies. That speaks to a couple of things. One, the interaction between the potential for fiscal support, what it means for economic growth, what it might mean for the differential or the difference in economic growth between the US and other parts of the globe. So we're seeing the dollar strengthen a little bit of that. And maybe just a reappraisal of that very consensus view of being short the dollar at this point in time. I don't think, however, it does change the longer term dynamics of rising budget and current account deficits, and those will still remain as challenges for dollar strength over the medium to longer term. I also just wanted to touch on negative interest rates, where we had a speech yesterday by an MPC member, Silvano Cinreo, discussing really the role of negative interest rates. Over the past 6 months, we've seen the Bank of England focus on this, come into to more of the spotlight, given some of the comments initially in the minutes in September, all the way through to where we are today. I think it's just interesting timing-wise that this speech has been given, and also just the backdrop of where UK economic growth is likely to be over the first half of this year. So something there, I think, to continue to watch, just given the detail that's in this speech, setting out the arguments for it and the benefits that may have been seen in other regions. In Asian markets today, the little real direction in terms of positive or minus movement. We'll see how the UK, European and US markets open, with futures at the moment really not indicating a significant change. Many thanks for joining us, and please do subscribe on the YouTube channel. Many thanks.
Subscribing to True Potential YouTube channel is quick and easy. Simply go to your YouTube app on your phone, type in True Potential and press the red subscribe option. You'll then be notified as and when new videos are released.